This is another T account analysis problem. This time we're dealing with accounts receivable, which is also an asset. And let's see if we can get some basic questions answered here. What is the normal balance of accounts receivable? Well, it's an asset, so the way you increase it, which is a debit, is its normal balance. So the normal balance of accounts receivable is a debit. Where on this T account does sales on account or credit sales go? Well, whenever you have a sale that's on credit or on account, you would credit over here under owner's equity sales or fees earned or some kind of revenue account, credit that, and you're going to debit the asset account, which is accounts receivable. So it's going to go on the debit side. So sales on account go on the debit side of accounts receivable and on the credit side of the sales account. Where on this T account does collections from credit customers go? Well, whenever you collect the money from your accounts receivable, you want to debit cash. It's an asset that increases that asset, and you want to credit accounts receivable. So collections go on the credit side and sales on account go on the debit side. So debits increase this account, credits decrease this account, and whatever increases the account is its normal balance. So the debit would be its normal balance. Now, let's see. Let's plug in some other things here. So it said that on September 30th, which is really October the 1st, because this is an analysis for the month of October for this accounts receivable. Says on September the 30th we had a $12 beginning balance, and you have to assume that all these balances are normal unless told otherwise, and a normal balance of any asset account is going to be a debit because that's the way you increase the account. So a beginning balance of 12. The company collected $11 from its credit customers, so we're going to have a credit there for $11 on the credit side. And it said the October 31st receivable balance was $17, so you have to assume that's normal, so that's going to be a debit balance of $17. And so what we're looking for here is the amount of credit sales that happened during October. That's the unknown piece. So let's do a little calculation over here on the side. The $12 beginning balance plus the credit sales, which we don't know, minus the collections are going to equal $17, which is the ending balance. So we'll combine all the pieces on this side. It looks like the unknown credit sales plus 1 equals 17. So these unknown credit sales would be 16. And that's our answer, 16.